Imagine a rubber band being stretched to its limits. Eventually, it snaps back, right? What if I told you that price action in the market works exactly the same way? Welcome to the Bollinger Band reversal strategy, a powerful tool that shows you exactly when price has gone too far and is about to reverse. Stick around because by the end of this video, you will not only understand how to trade this strategy with sniper precision, but I will also show you how to combine it with RSI for higher accuracy and fewer fakeouts. Let's dive in to this strategy. Firstly, before we begin, let's understand this tool. Before you use any tool, you have to understand exactly how this tool works. Okay, so here we have the Bollinger Band. The Bollinger Band is made up of three bands. Okay, we have the middle band over there, and that middle band stands for your period 20 moving average. Okay, it's just exactly the same function with your period 20 moving average. Okay, so we have the middle band, and then we have the upper band. The upper band is 2 standard deviation above the moving average. Okay, that's the middle band above the moving average. Now we have the lower band also. Okay, the lower band is 2 standard deviation below the moving average. Okay, so this is just a little explanation of your Bollinger Band and what it consists of. Okay, now let's explain how this Bollinger Band acts, how it behaves. Okay, now when you look closely at the Bollinger Band, you can see that at some certain point it forms some shapes like a circular shape over here. When you look here closely, we have like a flat shape over there, and then you have other shapes. So these shapes tells you a different story each time they appear. Okay, so when you see it forming those shapes, you know what to expect next. Okay, so now let's explain the contraction of the Bollinger Band like we have over here. Okay, this contraction we have over here, that is, it becomes smaller in size. Why exactly does it get smaller in size? Why exactly does it contract? Okay, so the Bollinger Band contracts when there is no much volatility in the market. Okay, there's no much volatility, the market is quiet. Okay, so at this period we call it the period of consolidation. Okay, so the Bollinger Band contracts during the period of consolidation. So each time market is consolidating, okay, you understand what consolidation means, right? That is, the market is having what, a sideways movement. Okay, like this. Okay, it's not going bullish, it's not going bearish, it's just what, moving in a sideways movement. So each time that there is consolidation in the market, the Bollinger Band contract. Now we can see example over here. You can see that there was a consolidation. You can look at this space too. There was a consolidation, and you can see here also there was a consolidation. So each time there is a consolidation in the market, the Bollinger Band tends towards contract. It becomes smaller. And what do you expect after each contraction? Is a breakout. You expect a breakout after each contraction. So you can see that over here. After each contraction, you had what, a breakout. Can you see that it broke out of that zone? Okay, so each time you see the Bollinger Band contract, look out for a breakout next, either breakout to the upside or breakout to the downside. Okay, depending on other factors, you can determine if it's going to break out to the upside or to the downside. Okay, if you have probably it has hit a major resistance zone. Okay, or probably it has hit a major support zone, or probably there is an imbalance in the market for it to go and correct. So that will tell you if it's going to break to the upside or to the downside. Okay, so that is that for the price behavior of the Bollinger Band when it contracts. So another one is the expansion. Okay, so each time you see the Bollinger Band expand, okay, when you see it expand, you know that there is high volatility in the market. There's high volatility in the market. But these ones I just explained are not the main focus of this strategy. So the key focus of this strategy is price going outside the Bollinger Band. Okay, price going outside the Bollinger Band. So you have to look out for when price go outside, stretches so far that it goes outside the Bollinger Band, or probably touches the upper part of the Bollinger Band or the lower part of the Bollinger Band. Now, what am I saying? Let me give you an example, an instance from here. Look closely over here. You can see that price went outside the upper band, okay, and it means that the price has what is limit, is stretching limits. The price has been stretched so far, and remember the example I gave to you using the rubber band. So each time a rubber band is stretched so far, what happens next is what it snaps back, right? So that is exactly how price behaves in the market. Now look here, when price has stretched outside the Bollinger Band, what happens next? It's what it snaps back. Okay, so each time there has been an excess stretch of price in the market, and you can notice that using your Bollinger Band, so it can either stretch outside the upper band or outside the lower band. So each time this happens, what do you expect next? You expect a snap back, okay, and that means price is going to actually reverse. Can you see that? And that's exactly what happened here. Can you see that when price stretched outside the upper band, it came back crashing down? Can you see that? This asset I'm using is just boom and crash, okay. I'm using boom and crash for this explanation, but the explanation I'm giving works for all assets, okay, be it cryptocurrency, be it currency pairs, any asset at all. So use it exactly the way I'm explaining it for any asset. I'm just using boom and crash for illustration in this video, okay. For boom, we're going to be focusing on the upper parts, while on crash we'll be focusing on price going outside the lower band, okay, because we want to be selling on boom and we want to be buying on crash, right? Okay, so don't be scared of spikes, don't be scared of spikes. You just have to get the strategy right, and no spike can knock you out. So when price has stretched outside the band, the next thing to do is to get ready to sell. But you don't just start selling immediately. You have to look out for another confirmation, and the next confirmation to look out for is the appearance of a bearish candlestick after the stretch. Now, when we look closely here, you can see that after the bullish candle went outside the band, the next candle that appeared was what was bearish. Can you see that? Before now, we're having bullish candles, okay, all over here, and when it has hit outside the band, what did you start seeing? You start seeing frequent what? Bearish candle. So how do you enter the trade after seeing this? Is to wait for the appearance of a bearish candlestick after the bullish candlestick, and that is exactly what we have here. Can you see that? Let me zoom in so you can see that. You can see that. Can you see that? Can you see the bearish candlestick appearing? So when that occurs, you get ready to take a sell trade. If I've ever tried entering a trade early, but you weren't sure if you should go ahead to do that, then this strategy is for you. If you've ever watched price reverse right after you enter the trade, hit the like button. Today, I'm going to show you a strategy that's going to stop all that from happening to you. Now, the next thing for us to do is to set up our band, okay? Our Bollinger Band. Let's set up our tools, okay? Now, we're going to be combining the Bollinger Band with RSI, okay? The RSI will help you to have a second confirmation, okay? It's going to help you to have a second confirmation. Now, I have my Bollinger Band added to my chart already. I'm going to show you the settings that you need to use. Now, let's head over to our indicator window and add up our Bollinger Band. So on our main chart, we have the Bollinger Band with the setting period 20 and deviation is 2 and the shift is 0, and you apply to weighted close. You can take a screenshot of this, then you add your color, okay, choose any color of your choice. So you can take a screenshot of this so you don't forget, but it's just the default setting of the Bollinger Band. There's no much extra setup, okay. So ensure it is applied to weighted close, okay. So you click on save. So that's your indicator on your main chart. Now on the indicator window, we have the relative strength index, okay. We add our relative strength index. The period is period 5, and we have applied to typical price, and then we have the levels, very important. So these are your levels. We have level 20, 80, 10 and 90, okay. So you can choose any color of your choice. Okay, I like to use black. Then the next indicator to add is a moving average to your indicator window. Add a moving average period 10, and the shift is 0, and the method is exponential, and then you click on save and we go back to our main chart. Okay, so we have our indicator window with the RSI and the MA. So now the RSI is going to help you to filter false reversals. So you should think about the RSI as your second opinion. Okay, think about it as your second opinion. Like after seeing that the price has stretched outside the Bollinger Band and you are still not sure, the next thing to use for your second confirmation is your RSI, and I'm going to explain how you're going to use it for your second confirmation. Whether you are using MT5, whether you are using TradingView or any platform you want to be trading with, these settings are easy. So just go ahead and add up your indicators to your charts and to your indicator windows. Now let's start our illustration. Okay, so now let's see how this strategy works on crash. Okay, I've explained how it works on boom, and obviously it's gonna be the opposite. Okay, so let's head over to crash to see how the strategy works with crash. Okay, so right here on crash, so just as I explained on the boom, but on crash you are going to be buying. Okay, you can actually use this strategy for both buying and selling, but I prefer to use it for buying on crash and selling on boom. So when we are on crash, we have to look out for price stretching outside the lower band of the Bollinger Band, and that is exactly what we have over here. Price stretch outside the lower band. And what do you look out for next? The next thing to look out for is to check if the next candle coming is going to be a bullish candle. Okay, remember on boom you have to look out for a bearish candle, but on crash you have to look out for a bullish candle, and that is exactly what we have over here. We had series of bullish candle coming up, and that is a signal for us to take a buy trade. Okay, that is a signal for us to take a buy trade. Now the second opinion that I told you about, that is using the RSI to confirm. Now when you see this happen, what do you check out for next? You have to look at your RSI, check your indicator window. If the moving average is touching what? Level 10. Okay, if it is boom, you have to check if it is touching level 90. Okay, but on crash we have to check if it is touching what? Level 10. And when we see that it is on level 10, it means price has been what? Oversold, and it has reached its exhaustion. So it means we can what? Confidently go in for a buy trade and you write massive profit all the way up there. Okay, but you don't have to wait for that long. Okay, you don't, especially if you have a small capital. Okay, if you're trading with a small capital, you don't have to wait for that long. The best place to take your profit is at when price touches the middle band. Okay, to be safe, when price touches the middle band, because each time price reaches the middle band, it is likely to spike. It's likely to spike. So if you have checked for other conditions, like you check out for other conditions that can make you to hold the trade longer, then you can wait till price what hits the upper band and then you take a profit. Okay, you can combine this with further price action for you to know how far you can hold on to your trade. So that is how this strategy works on crash. Now here's the bonus tip I have for you. Okay, let me tell you the time frame that you can use this strategy perfectly. The strategy works perfectly for the 5 minutes time frame and for the 15 minutes time frame. On this time frame, the noise is less, so do not use it for 1 minute time frame, although it can also correspond, but I prefer using it on 5 minutes time frame and 15 minutes time frame. When you wait for price to go outside the band, okay, it shows what? Price exhaustion. Like the sellers, they are exhausted. Okay, the sellers are exhausted, they have no more energy to push price downward. So you are not just buying the dip, you are also buying the sellers exhaustion. Okay, we are almost done, but in the next few minutes I'm going to show you 3 secret tricks to make this strategy even more profitable for you. Here are the 3 pro level tweaks that you can use. One, you have to identify candlestick patterns. Okay, so when the price stretches outside the band, be it the upper band or the lower band, but in the case of crash now, price stretches outside the band, the lower band. Okay, at that very point you have to look out for candlestick patterns, and on a support zone, what do you look out for? You look out for candlestick patterns like your hammer, okay? You can look out for candlestick patterns like inverted hammer, and you can look out for doji, and you can look out for the morning star. These candlestick patterns, they signal reversal. So once they also appear at this zone, you'll be more confident price is definitely going towards to reverse. Now the next pro tweak for you to use, number 2, is to what? Make use of support and resistance zones. Okay, now when you see price go outside the band, you have to check, did it happen at a support zone, did it happen at a resistance zone? Now let's look here, let's look over here. You can see that price hit the upper band here, and when you look backward, okay, when you look backward, you can see that there is a resistance zone there, and what happened next is a crash down. Can you see that? Is a crash down. So you have to make use of your support and resistance zone to further solidify your confirmation. Now the next strategy is to trail your stop loss. Okay, you have to trail your stop loss. Now when you get into the trade, you don't just leave your stop loss fixed. So when you get into the trade, you place your stop loss just below what? Those candlestick that is outside the band. Place your stop loss a little below the wick of the candlestick outside the band. And as your price progresses, what do? You move your stop loss, okay? Especially when you have passed the middle band and you still want to hold on to the trade. If spike comes, you have to trail your stop loss, move it. As price progresses, move it. Okay, this is part of risk management. Okay, you are here to make profit. Now, you have to combine all these 3 pro tweaks I've given to you. That is the use of candlestick patterns, the use of support and resistance, and then you have to trail your stop loss. Okay, now when you combine all this, it's going to make you so profitable. Okay, it's going to make you so profitable. Okay, so now you know how to use the Bollinger Band reversal strategy to trade any asset that you want. Okay, although we use the boom and crash for illustration, but this works for perfectly for any assets you are trading on. Okay, now let me give you one precaution you should look out for when using your RSI and MA to match with your price on the chart. Now look, when you look at your indicator window, okay, you know, when you move your chart, when you move your chart, you can see that the MA kind of moves. Sometimes it might look like it's at level 10, okay, but when you move your screen, watch there, it's going to move, it's going to leave. Can you see that? Each time price extend beyond the upper band or the lower band, you have to confirm that your RSI is fixed on the level, either fixed on level 90 on boom or fixed on level 10 on crash. Okay, now let's look over here. Can you see this here? Can you see that touch over there? Okay, when you look at the indicator window, you can see that it's at level 90, and for me to confirm, I have to move my chart to see that it doesn't leave. Can you see it doesn't leave? That is what a clear signal, a short signal for you to what? To sell on that. Example over here again. Can you see that? Can you see this? And when I look at my indicator window, it's at level 10, and I move my chart to see that it doesn't work, it doesn't leave, and that is a sure signal for me to get into the trade and make some massive profit. So the same thing happens on your boom. You have to make sure you move your window to check that the MA is fixed. Okay, the MA is fixed. If it leaves, do not take that trade, but if it's fixed, you can take that trade. We have another example here. Can you see that? Okay, it's fixed, and we have a breakout there. So ensure that your indicator window, your MA, corresponds with the price on the chart. Okay, they are both on the site of exhaustion. Okay, you can see that. So now let me give you an example on the current price. For instance, you come and you met price here, you met price here. Okay, let's say you met price here. When you look at the price, you can see that it broke through the lower band, and you might say you want to enter a buy trade, but you have to further confirm. You look at your price, your MA is at level 10. Don't just conclude. You have to move your chart. Move your chart to see if it leaves. Can you see? As I move it, it leaves. This is a dangerous trade. Do not enter a buy trade. And when you even look at your chart, you can see the trend is going bearish. So do not buy. You have to make sure that you check to see that it corresponds with the trend. Okay. ensure it corresponds with the trend. So now that you know how to use this strategy, I want you to go and backtest it on your chart, backtest it often, and when you are confident enough, then you can go in for a live trade. Okay, now use the strategy to make massive profit out of the market. Make massive profit out of the market with this strategy. If you get everything right, you are going to make massive profit using this strategy. If you got value from this video, I want you to hit the subscribe button and turn on the notification bell so that you'll be notified when we post many more amazing videos. Till I come your way again, trade smart.